G'day traders, this is our Group 2 discussion about tech stocks for this week's review and how it's performed. Let's firstly look at the summary of what it's happened so far over the rolling 18-month period, and that's an approximate time frame for 15-minute chart analysis. So here we're looking at these tech stocks, and as you can see they're quite speculative. Most don't have dividends paying, and you can see here some of them have done really well and others have had no movement because of the lack of data on the charts primarily. So let's look at all of these. I want to emphasize though, with some of these tech stocks, well probably all of them in many ways, that's the nature of tech stocks. They're very volatile. So if you look at Tesla and Gamestop, for example, and there's been quite a bit of controversy with Gamestop and AMC Networks in the last couple of weeks, they can skyrocket. So when they skyrocket, that's great for you, but at the same time they can plummet. And that's why, for two reasons. Number one, that volatility, it can be good when it pays off, but it can be devastating if it goes against you. Likewise, they're not paying dividends if it goes against you. So you don't want to hold it long term if you're getting no return at all into your account. So let's look at each of these and discuss them. So I've looked at some primarily some Australian shares, but also some mostly US shares as tech stocks. So Computershare first of all, let's look at how that's performed. So you can see there for a buy and sell strategy, it's done a few trades with an overall profitability of $689. The buy and hold strategy, that is, you just buy it, you don't sell it. It's down below our $100,000 baseline. So we're running at a slight loss on the buy and hold strategy, and that's where it shows there. The buy and sell strategy is making $689, and the buy and hold was down $200. The maximum drawdown is $13.45 in the red. The drawdown, just to explain that again, that's from the highest profitability there to the lowest point of profitability there, and that's what that drawdown means. So we were down for $1,345 on the drawdown. It's not a loss, it's just it means how much depth you need to have in your bank account or your trading account to absorb that downturn. Raytheon, you can see Raytheon was down quite a bit since the COVID, that's the price chart there, since the COVID collapse. It's been going sideways, although it's accumulated, and it's closed out at a profit. So we can see there we've made $2,297 profit over the 18th month period, whereas the buy and hold strategy is still in the red. And you can see here we've got a trade opening back at early December for 27 shares, and we're still open on that one. So that's still going, the price is still going sideways, so we'll just hold that and see how that performs in the coming days and weeks. Next we'll look at Tesla. This is that volatility we need to be mindful of. So you can see here the buy and sell strategy, we've opened and closed a few trades, whereas the buy and hold, had we held it, you would have been up $36,000 versus $6,500 for buy and sell. So that's great if the price goes up, as in this example. But again, if you can pick that sort of stock with any stock on the share market, good on you. You don't need the buy and sell strategy. The other thing to note here is you can see here as the price was lower, we owned 41 shares back in this period. There we had 31 shares and so on. So as the price increased, the number of shares we held also decreased. Whereas up to here now, because the share price is $844 odd, we own there just over 2 shares, 2.25 shares. So that's another factor in the way it's performing. Next, look at Gamestop. So again, if you can pick this, you're a genius. The buy and sell strategy, when it was going, pretty much the market was going sideways. You're still up 29,000, but again, it spiked up there. You would have gone to a trade there, and it spiked up there, so you would have got out. and at the moment you would have closed out and not back into it. Whereas the buy and hold strategy, you're up $21,200. So you can see there, 29 for the buy and sell, 21,000 for the buy and hold strategy. And you had a drawdown maximum of $32,000. And that drawdown would have probably come in effect probably somewhere around here. Next we'll look at AMC Networks. This is another one of those ones that is in controversy at the moment on the markets in the last couple of weeks. Okay, we only just got into the trade, very limited data on the chart. As you can see here, it opened up in January, not 18 months. So it only got up a slight opening there for both the buy and hold and the buy and sell strategy. Making just opening up the trade as we're speaking. So $14 there and $22 there, no drawdown as yet. Blackberry. Again, very limited data. We made buy and sell strategy there. We're up $4,100, the buy and sell strategy, and we're up at $1,663 for the buy and hold. It's broken our $100,000 trade benchmark there, or baseline. But that buy and sell strategy is outperforming. But you can see there as well, Blackberry's spiked there, then it's fallen off again. So you want to really avoid those sort of stocks that do this. That's why tech stocks have got a habit of doing that. As much as it goes up, it also can also plummet like it did here as well, similar to AMC and Gamestop. Lastly, Nokia. Nokia hasn't really done much, limited data. Let's look at the chart anyway. Again, no trades open, so nothing really to talk about there. So overall, the buy and sell strategy has made $42,000. And again, for each of these trades, we're buying $2,000 lots of trades for each entry of shares. So $42,900 for the buy and sell strategy. The buy and hold has made $58,000, but be mindful that especially Tesla, GameStop, and pretty much all of them, as you saw from the charts, there was a spike in the price, then it fell off. So had we closed out just on Computershare and Raytheon, let's say we looked at only AMC Network and Blackberry, you'd be up about $7,000 only. So again, you want to try and avoid that, is what I'm trying to emphasize here. Anyway, that's a summary for this week's trades on these tech stocks. We'll look at these again next week and see how they're performing. Thanks guys, and speak to you next week.